Hey everyone, this is DayTraderRockStar, and this is the 10 for 1,000 watch list for the week of April 23rd. And a couple days off last week. I want to thank everyone who chipped in and helped cover the show. It really it was great to spend some time. And so I'm here to put out a good watch list for you going into next week. And the first thing we're going to start off is just talking about the market conditions and the cautious nature that we should be in. I'm in right now because of some recent signals. Now, being away from the market still doesn't, take me out of the market. And I, do my research and follow the markets during the day. We noticed that the last 2 days, Thursday and Friday, we had an early morning, move up and then a later day sell off, and that typically is a signal of a correction phase in the market. Now, excuse me, I haven't really seen the breakdown, the volume that accompanies that. We are seeing some of the top leaders start to roll over. Well, not really leaders in the way there are some really great strong stocks out there to continue the lead, but the apples finally broken down, and we're seeing some other big tech stocks break down also, and some of the higher market cap stocks start to roll over a bit, but not enough to really believe. I still think that there's a slight opportunity to move higher off of this level, but I am definitely cautious. I'm preparing for a move down over the next couple of days. We're setting up here right on the trend line. Again, the major keys here is, possible crossover back over on the daily. The sell-off that we get at the end of the day. Normally we have these dip buyers in a very positive bias market. You see people coming and buying the sell-off. Now we're starting to see the pops being sold into. So this is a change, and you have to monitor that closely, because that's a good tell for the overall market conditions when people start to sell into rallies. And that's what we've been seeing over the last 2 days. Now, just looking at the daily chart, you can see that the underlying trend line is still intact, but we've been bouncing off of it once, twice, 3 times, 4 times, 5 times, basically 6 times we've been right on that trend line. And that's pretty serious. That's we haven't popped above the 20 period moving average. Stochastics gave us that bounce, and what was good is you could break this down onto the 60-minute chart. And what we're going to do is look at the 60-minute chart fast, and the 60-minute chart will give us a much better shorter-term time frame to trade the market. So we've had great signals on the 60-minute chart each time we've come down, and we give it a recognizable channel. And you can see the market has channeled out nicely in these phases. We broke down. Popped back up, broke down, got oversold, had that rally, got overbought, pulled back, got oversold, had that bounce, and now we've crossed back over here, not even getting into an overbought level yet, but still, kind of weak, not retesting the highs and stuff, and this upward channel typically breaks. This could be easily become a bearish flag, and if we zoom out here, you could actually see that this is a this kind of flag, upward sideways channel here breaks to the downside. And we have another one here. You can even put in the argument that this is more of a rising wedge. And that, turning over here, the momentum could be shifting back down here. And now this is on the 60-minute chart. So this is a much, faster time frame. You'll be able to trade better off of this chart right now. So we go back to the daily, and we take a look at some of the interesting levels we want to pay attention to if we do get this breakdown. First of all, there is a slight upward trend line here that represents maybe a neckline of this head and shoulders formation. This is also a very possible beginning of a head and shoulders, and there's a little neckline here that goes right across here and right across here. And if that broke down, and we consider this a head and shoulders, a measured move would bring us down to that 200 period moving average, right into that 1310 area. 1305 now, but by the time the price moves around and you get, the moving average will be moving up a little bit more. So that's an overall, target way down there. But right now we're looking at this 1357 to 1362 level, which becomes an important level. Just to watch to see if this breaks down. This is like the head and shoulders area, the neckline, and the breakdown of recent lows here. So a breakdown of this 1357 level would definitely confirm more downside, and probably get us that selling volume we want to see when you do see a little more selling or correction. The basic material sector, which I've been following a lot, has still been set up. There's interesting action on a lot of that basic material areas, and they have kind of bullish patterns playing out. So that is the other side of the coin. In my in my outlook here, we're actually looking at the possibility of these type of patterns breaking down. And I do think if the basic materials caught a bid and started moving up in this market, that would help this overall market up, and we'd push higher. These are all set up. The XLE is basically the ETF, one of the ETFs that tracks a lot of these stocks. And you can see the cause stochastics, the downward channel, and a slow grind back up here. And you can see these across a lot of the stocks that I've been following and slowly scaling into, the FCX, Freeport McMoran. And we did make nice moves up and starting to move out, even though Thursday and Friday we got that corrective move back, and these are looking a little weak. So, even U.S. Steel has been holding up pretty good. A little consolidation sideways, actually showing some really good strength, and the stochastics haven't really crossed over. And these are still, setting up. The BHI, another stock I like. But again, these are also, we don't want to try to capture a bottom on this, and can easily go lower if this market decides. So right now, going back to the market call, I think we're going to be very, very cautious going forward. Meaning, if the market does go into corrective breakdown here, and we actually start to break down, we don't want to be taking really, new positions long. We want to concentrate on preserving capital or trading the trend. And for me, that's more of trading the ETFs, the SDS, and some of the pro short shares, that track the market, instead of trying to find an individual stock that could go either way. There's big stocks out there, and just because the market's going down doesn't mean that stock has to go down. There's more volatility in individual stocks when it comes to that correction, and if the market's breaking down, I find it just as easy to get onto the VIX type of trade, or some kind of short ETF that tracks the overall market and try to picking out the individual play. But there is a couple good setups for this week on the short side, and I'll show you those too. So we're going to kick things off. First of all, another thing I want to do fast is, now that you know that I'm very cautious going into the market, we had an inside day, Thursday, Friday pattern, and this overall last 3 days we're inside this large day. So a breakout of this pattern right here, the breakout of this 4-day pattern, will definitely also confirm a nice move. And I'll just say, we're still in the middle of we're just going into the second week of earnings. There's some big earnings coming out. Let's see if I can actually. Tuesday's Apple, with AT&T, United Technologies, and 3M. So these are all big Dow component stocks. Also, other big Dow component stocks include Boeing and Caterpillar on Wednesday, ExxonMobil on Thursday, and Chevron, Corp, and Procter & Gamble, and Merck, wrapping things up on Friday. So this week has some large market cap stocks in it. And of course, the market, when the market moves, it's based on the stocks in that index. So, we have to add that in. So it's going to be a very cautious week, even because of the earnings. Earnings could play a part too. So I think, we're going to put out a good watch list here. I want to also show you what came of last week's watch list. I want to jump on that right now, because it was a good, actually, looking back at it, it actually performed really well, even though I didn't take too many positions off of it, because I was starting to feel a little cautious, and then midweek I didn't feel good, and then I was off the rest of the week. So I didn't get much action in the market last week. But I'll go review it, and you can actually look at what we could learn from it, good or bad. APL was the first one on it. And again, I just kind of marked off, we'll just review. This was basically a nice coiled daily stochastic, got oversold. This represents the Monday, the beginning of the day, beginning of the week. And the 60-minute chart also represents that. And it was just at this point, it was a quality stock on a daily, and the first pullback. It was really an HPS pullback going into Monday. And you can see it did drop off a little bit more, just a little bit more off the Monday open, but then took off and moved up over $1. So overall, that actually worked out. I didn't take that stock. I haven't been watching it. The BHI really didn't do much. The 16th, it moved up a little, then consolidated, and it's still in this sideways channel. It still looks interesting longer term, but again, if the market decides to roll over here in a corrective phase, then we could even see some more weakness in this one. So we're keeping an eye on this channel going forward. But BHI was again the CCJ. Take a fast look at that one. we pointed out positive stochastic divergence on this chart, and from that point on, it was off to the races. And again, that was also on the watch list last week, CCJ. So you could see the pop and the pullback, and actually it was working really well. And you can see the overall pattern on this was this downward channel, came down to the lower part of the channel, the oversold stochastics daily, and you see the reactionary move from that. So a very positive move out of that on CCJ. So worked out really nice. Chef didn't really move much. Still looks great though. Still one of those quality stocks. I think it's going to move higher. Dollar General, of course, a very good stock. And again, from the 60-minute, we could go back and look at the when the alert on the 16th. Here's the 16th on Monday. So again, this one, a definite winner on the watch list. It's just a very strong stock. A lot of the watch list stocks this week, you're going to notice, are very strong, stable companies. But this continues to look good. Dollar General continues to look good going into early next week. 3-day consolidation. A breakout of that 3-day consolidation would be, probably be a good buy right now. Let's actually break that down right now and put that on the watch list as an official thing, because I was pretty much reviewing stuff before posting this week's watch list. But we're going to say 47.20. Let me write this down. We're going to give it a breakout of that a 3-day pattern. So the buy trigger is 47.20. And you just going back, you can see that we're flagging out. The stochastics are very positive. We have not overbought. We have a 3-day consolidation. So if we did get that strength in the light of this market, that would be a very bullish move. So I would buy this on strength, and that might be that could be that candlestick which really confirms the breakout of the flag. And lots of times when you get a flag breakout, you can see here this large candlestick. You want to see that large breakout, and that could easily happen on a break of 47.20 on that one. That's Dollar General. We could throw one in there fast, even though this wasn't the official, but that now is on the watch list. Going back to last week's watch list, Family Dollar FDO, and you can see the results from that one. Just took off. And again, these are, this is in a market that really did not really perform too well. It was just a very chop fest market to the downside, very lazy and corrective phase of the market. And these stocks on the watch list continue to move higher. Again, not trying to, tangle with some of the bigger stocks, but some of the quality stocks. And you can see the reaction off. Sometimes, here, this is Monday, and you can see Monday's reaction off of that from that stock from Monday, off of this watch list. So I can't wait to show you this week's watch list, because I got some special ones for you. Gold Corp, GG, last week, just to review, didn't do anything. Sideways consolidation. The watch list actually had a watch area. This one was a buy trigger watch area for this area down here. So I wanted to see any reactionary chop or drop here, a fast drop down into that. Let's see what I had, $39 to $37 area. So basically, I wanted to get it down here further to buy it. It never got down there, but still active. NVS, great setup. Here's that green candlestick. It was basically an oversold. Just a very easy, play out of the methodology, waiting for the daily, the 60 to set up, recognizable upward channel line. We have some, just positive divergences between the price and the higher lows. So it's just a pretty good momentum trade, and it just popped and it continues to look good. It was excellent setup on NVS. Occidental Petroleum, OXY. Didn't do anything. Sideways consolidation, flattening out. Kind of weak. Not really super jonesing about it, but it's a good quality company. It's off 105 down to 88. It will move back up. It's just a matter of, is it, again, these basic materials and, oil and gas stocks are set up nicely. So this is one thing that we could see. There's no reason why this can't break to the upside. You break to the downside a little bit further, but there's no reason why we can't wait to see what kind of news comes out. Some other things that could spark the market. If there's any type of news out of Europe that could really, add to. And there's talk of QE3, of course. People are not giving up on that. So you can see the downward channel line. It's staying within that channel. I love these type of patterns, but it just doesn't. It seems very choppy right now, and that's the reason why we're being very cautious. And if we see that breakdown, we don't want to be chasing these things. A couple days, let this market figure itself out is not a bad thing. It's just something that you have to do. You cannot be in this market every single day of the year. You want to really pick your points. And again, this is just part of that review. And just PBR, another one from last week's watch list. Didn't really do much. It's definitely coiled up. Again, it still has that big opportunity, big pop, available to this. But there's going to have to be something that really triggers this market to get this going. There's going to have to be something out there, else these things look very weak. And you can see it's right on the lower chart of the channel. It's just nothing's happened from it. And PRGO, that was one of my favorites. Again, nice consolidation. This one actually moved up off of the consolidation. And let's take a look at the 60-minute chart. This is Monday, PRGO. And you can see a nice move up. It moved up over $1. Well, moved up over $3. Again, it was basically a quality stock. I like the consolidation. It was not much more than that one. Just looking for this stock to push the 52-week highs, which it did. And Price Smart PSMT, another one very similar quality stock. And again, this was based off of a what's this? This is PSMT, not PSGT. Disregard that. PSMT. Anyway, oversold on the 60. This came out last week, and you can see that move. So I just want to go back to kind of reinforce what type of signals we want to look for, the discipline, and how important it is to wait for your entries, to get out. Market's super volatile. Doesn't mean stock going up doesn't mean it needs to continue to go up. It's very you can see how a market moves up, pulls back, moves up. The object is to get our money in here. Take it off here and then put it in something else that's pulling back instead of having it waste time here. And that, of course, we don't do that all the time. But again, that's how we use the stochastics, and that's how we want to use our timing to get in and out on the 60-minute chart. All right, so now let's go over some stocks for this week, and I think you're going to like these.